Hey guys, I couldn't be more thrilled to have back on the line David Morgan from themorganreport.com. David, welcome back.
Well, thanks for having me.
Thanks for being here. David, as you know, 2011 couldn't have been a more rocky year for silver, starting around $25, $26, running all the way up to nearly 50, and then pulling back to 26. It seemed like the bankers were sending us all a message, and that message is, if you want to buy silver, be prepared to go through some pain, because we run the show. That's my take. First of all, what's your take on 2011, and what's your take on 2012? Out of the gates, this thing has just been on fire.
I'll do both. 2011, obviously an extremely volatile year. Started around a $30 level, moved down around the $26 level, and from there we almost got a double. It went from that level all the way up to about 48. Peaked around the 1st of May. We had a sharp sell-off, got down around a 33 level, and then treaded water. We were actually making some progress getting back into the $35 zone or so, actually moving up. And then gold did what silver had done earlier in the year. Gold made a parabolic move roughly from about the $1,500 level to about $1,900, and it got sold off sharply as well. And when gold sold off sharply, silver sympathized with gold and went down even further. It actually touched to the $26 level and change. That level has been tested one other time. And right now, as we're doing the interview, as you said, in early 2012, silver has done quite well from the beginning of the year. So what do I expect? Well, more of the same. I expect a lot of volatility in both of these markets, particularly silver since it's a smaller market. I also expect that it's going to be more and more difficult for the derivatives market to have as much control in the market as they have in times past. Really, all these derivatives do set the paper price or the price for silver and gold. But Mr. Sprott had a $1.5 billion shelf filing that allows him from time to time to purchase more physical silver. And he just did that very recently. About $300 million were converted into physical silver, roughly 9 million ounces. And from that time, the market's moved up about more than $3 in probably 5 trading sessions. So that shows you how quickly the market can move. And going back in time, going back again to 2011, when Mr. Sprott had just started the Physical Silver Trust and actually had not made any purchases, I was in their office, spoke to him and a few of his crew, and we discussed, potential impact of buying about $500 million of silver at one time physically would have on the market. And some people that I was working with through the European side of the silver markets had suggested that we would probably see about a $4 move in the price of silver and probably take 2 months to get the silver. And that's almost precisely what happened. So even though a purchase of $9 million recently and about $22 million on the initiation of the PSLV isn't a lot relative to the 750 million ounces that are produced on an annual basis, it is significant enough to get that amount of silver in a short period of time to move the market rather significantly. Now, I'm not suggesting that all of this $3 plus move is only because of the PSLV adding 9 million ounces, but it is part of it. And so I am very bullish on silver on the website silver-investor.com or themorganreport.com. I have a study that I did that's for members only that is a 10-year look at the silver market. And what I've done in that study was look at both the industrial and the investment demand going forward over the next decade. Now, whenever you look at anything 10 years out, you're bound to make some mistakes. So I tried to tighten it up and be as conservative as I possibly could, making some very basic assumptions on investment demand going forward, mining supply going forward, recycling supply going forward, and what the industrial components would do in a worst-case scenario. And because of all of that, I came to the conclusion that the next 10 years in silver, meaning when I did the study in early 2010, so from 2010 to 2020, was actually more bullish than what had taken place between 2000 and 2010. So I'm very bullish, but that doesn't mean that we're not going to see more volatility in the markets and a lot of back and forth and this kind of thing. But all that's on the background, as we all know, of what's going on in the global financial system, which continues to become more tenuous, to put it politely.
Let's circle back to the thoughts about Eric Sprott. In his Silver Producers, A Call to Action letter, Sprott suggested to miners, quote, instead of selling all their silver for cash and depositing that cash in a levered bank, silver miners should seriously consider storing a portion of their reserves in physical silver outside the banking system. And in that same vein, David, some good news. We see the CEO, Bradford Cook of Endeavor Silver, and guess what? Endeavor Silver is doing just that. And Bradford Cook says, and I quote, the long and short of it is, we're bulls on silver. We took the view that there was a short-term downturn, so it just made better sense for our stockholders to hold metal instead of cash. He's basically announcing that he's taking Sprott's advice. What kind of impact do you think that will have?
I think it'll have a good psychological impact. As far as, moving the market, I don't think it'll have much impact. But psychology is very important, because now that someone has, taken it seriously and taken the action, that puts a little pressure on other silver mining companies. And I like that. I like it a great deal. I've known Brad basically from the inception of Endeavor Silver. In fact, the truth is that Brad met me in a hotel room at the Vancouver show years and years ago and said, you know what? We like silver more than we like gold, and we're starting a silver company, and I think you ought to know about it. So I've watched that company grow from basically an idea to where it is now, where they're able to hold silver and gold off of the market because it serves their shareholders better. So I like the idea. I'm for it. It's something that was mentioned at the Silver Summit years and years ago to some of the silver companies. The only one, to my knowledge, that really did that was Silver Standard. They did that to some extent under Robert Quartermain when he was the CEO of Silver Standard. But, it's something I like a great deal, and we're just going to have to wait and see if there are others that will come to the fore and execute in the same manner.
Now, the last time that you and I talked, you did tell the story about having consulted with the Sprott folks and coming to the conclusion that based on the purchase of physical silver they needed to basically start PSLV, that it would move the price of silver about $4 an ounce, and it did. And now we're seeing this time that silver, really since the beginning of the year, is up around maybe a little bit more than $4 an ounce, actually, maybe $5, $6 an ounce. Do you think the impact has been made now, or do you think that this thing could easily run into the high 30s and make a run before the end of the year back to 50 and potentially even higher?
Well, great question. What do I think? I'll tell you what I think. First of all, silver attracts a lot of momentum players. It always has. All the commodities do, but silver in particular. It's a very emotional metal. It's a small market, so there can be a lot of movement one way or the other. I think silver's probably going to go to 36 or perhaps better on this run. And then I think it's going to find a top at some point. But longer term, I'm looking for silver to make a new high this year, a new nominal high. I think we're going to see $60 silver by the end of the year. But we're going to be back and forth as we get there. Again, remember what we talked about in the beginning of the interview, and that is it's going to be an extremely volatile year again for both gold and silver. And so the long-range, long-term view approach is probably the best. I think most people should just buy the physical and hold it and buy it for cash. Don't get over-leveraged. Don't use any leverage. Certainly there are people that will and want to, and that's their call, but make sure you know what you're doing because you can have a really good asset class, and if you aren't smart about how you approach it, you can end up being right and losing money. And what I mean by that specifically is if you use leverage or margin or you get sometimes the wrong mining company or whatever, you've got to diversify within the sector. And you also be very smart about your purchases. And again, for most people, it's best just to buy for cash and hold.
Yeah, and that actually brings me to my next question, which I know you get a lot. And the question is it too late to buy? Now, before you answer that, I just want to read this because it couldn't be more important. Bloomberg is reporting, quote, the Senate voted 52 to 44 against bringing up for a vote a measure that would have blocked a $1.2 trillion increase in the national debt ceiling to $16.4 trillion in the legal cap on borrowing. Under a convoluted agreement among lawmakers, the action allows the debt ceiling to rise automatically without additional government action. So, David, when people ask you, is it too late to buy? We see these governments with no escape plan. The only approach there seems to be worldwide is to print, or to raise these debt ceilings, or to do whatever's necessary to allow these economies to not collapse, to keep the Ponzi going. So, David, is it too late to buy physical gold and silver?
No, it is not. The main point I used to make on a lot of my lectures, and I did actually recently in this Vancouver show, was that 90% of the move comes in the last 10% of the time. Now, that is probably an exaggeration, but the idea is sound. And the idea is that when these markets get high, there's a lot of people that won't get into them, but they're going to go a lot higher. And this is not true only of the silver market. It's true of most markets. If you go back in memory and look at the NASDAQ when it hit like 5,000 and it had been, under 1,000, I mean, that's a five-fold increase. And that last leg up in that market took place in a very short amount of time. And the top, as many people may recall, there were a lot of dot-coms that I call dot-bombs, and these were companies that had, no business plan, no cash, no way to make earnings, and yet they were selling based on, eyeballs on their site and this type of thing. It's just totally ridiculous. Similar thing in the real estate market, similar thing in other markets as well. So the reason that you will get that is there's this panic buying or greed buying at the end of all major bull markets. And this time I think silver in particular is going to be way into the record books. The reason being is that, one, it's going to be one of the most emotional buys made because of what's going on in the global currency markets. It's also small, and it's also affordable for most people. Plus, it's a global market this time. I mean, if you think back that the Hunt brothers and a couple of Arabs could take the market from roughly $6 at the beginning of 1979 up to 50, and there were other buyers, of course, but I mean, that's normally the thinking behind that move. In 1 year, you get about an 8-fold increase in a commodity 1 year, and you look at how long it took silver to go from $1.29 to $6, which is about 14 years. I think I'm making my point. The point is this: it is not too late to get in the silver market.
Yeah, absolutely. And just to flush that out a little bit for folks who are new, when you say the last 10% of the move is when most of the money is made, just to be really clear, we're nowhere near the last 10% of the move or the last 10% of this bull market. If your projections are the next 10 years look good, then we're nowhere near that end game, are we?
Well, we're not. And basically, if you want my timing on when it's going to peak, first of all, no one knows. I think it's probably going to be somewhere between 2014 and 2016. That doesn't mean the fundamentals aren't going to be even better in 2018, but oftentimes, markets are either undervalued, fair valued, or overvalued. So silver could get overvalued. The problem this time with the quote-unquote overvaluation is what do you measure it against? You really can't measure silver against paper money because paper money is way too volatile. I know how I say silver's volatile, but really when you think about it, an ounce of silver never changes. An ounce of silver is an ounce of silver always and everywhere. It's the paper fluctuation and the markets, of course, underlying the silver market that move it. But regardless, I would look at silver's purchasing power to find out if it's overvalued. I mean, if you could buy, 2 houses for 2,500 ounces of silver, you might start to question if silver's overvalued or not, and I'd make the case at that level it probably is. So that's what I'd be looking for as far as trying to find an exit point.
All right, David, thanks so much. We will talk again soon. Thanks for all your time.
My pleasure. Thank you.
Well, that's it, guys. My thanks to David Morgan, and my thanks to all of you for listening. And until we talk again, keep stacking. Good night.